Alrighty, so this video will now be continuing off of where I left off the last time. Um, I believe the last video that I did was portion of last week, or all of last week's delivery, and then including Monday. Now we're moving on further into the week. It's now Thursday, June 11th. So pretty much just going to be going over the next three, well, the previous two trading ranges, including the one from today. So the next three ranges of the daily's PO3. So nothing's been touched. Everything's remained unchanged, and now I'm just going to go over the case study for today. So this is price on the hour. Structure still relatively looks the same. Just cycling through. Look at this cluster of candles here. It's a 30-minute. What price looks like on the 15. And of course, the 5-minute. And I'm bringing the framework back. And now I'm gonna go over everything that it was that I was seeing. So one of the very first things that I realized is coming over, going on into the week, Monday, that PD array from Monday was swept on Tuesday, and we ended up forming the higher close on the candles range, giving us a sweep of that buy side, and then a breakdown and continuation of that candle structure going downwards. So everything that you pretty much seen on the higher time frame would just represent bearishness, trading into that support, as you can see. So do understand, I'm gonna say this a lot, that price is fractal. So a lot of the moves that you're seeing on the lower time frame is the same moves that are happening on the higher time frame, because the PA has to clearly come from somewhere. So we're going down opposed from the 4-hour, 1-hour, 30-minute structure. All of those indications into the bearishness of that candle is going to be shown on the lower time frame, of course, but panning out on the higher time frame until we get to those initial deliveries that we're pretty much looking for. So excuse me. Monday, Tuesday we pretty much sweep, rallying to level of supports, take out the low of the day, take out the low within Asia, things of that sort. Just magnetizing ourselves, to those old lows. Now, going on later on into the week, after Tuesday we end up bottoming out at 12:30, which would be noon. And after we make that low for Tuesday, which is 28,227.25, notice how the market has a nice strong reaction going up after creating the lower close on the daily PO3, within profit taking hours of 10 to 12. So after that, going on into the next day, Tuesday, this short-term high that is resting here, we come back and we sweep that high. It's very same setup that happened here with Tuesday, very same setup that happens here with Wednesday, except we didn't sweep a PD array, we swept a short-term high in this upper proximity of this range. Has some resting buy stops, so we can see exactly what time frames hold the strongest confluences with that candle high here on the 15. More of the story, you can cycle up to the 30-minute, hour, 4-hour, and see what importance this high, this area has once we do trade into it on the lower time frame. The macro of that high is probably some important high off of the the 4-hour, the 2-hour, the 1-hour candle, the 45-minute, the 30-minute, etc., because price is fractal. So boom, just get something to represent the sweep there. Wednesday, very same thing with the structure. If I was to go ahead and add a replay and take these things away, and see how we get the sweep. And at 9:30. Right here. So we have that Judas swing. In the initial leg going up, we sweep this short-term buy side, resting above here, same way how we did on Monday and Tuesday's delivery. We have here with a short-term high instead. Reaction we get at 10:15 to about 10:30, and that opening window. We trade above this high. Let's see exactly how many points. About 55 points. So we stop hunt about 55 points above the high that we had a resting buy side. So I like to draw visuals of things when I'm pretty much looking at these things. It's just the range on the sweep. It's literally all this is highlighting. Cool. So range on the sweep is about 55 points. So stop hunt 55.25, which is a tick. For this one, I stretch it across the top. Just make a text for it, honestly. So the stop hunt happens up there for about 55 points in a tick. After we get that, change the coordinate for the second one. Sorry, I'm a little bit of a perfectionist. I like for shit to look a certain way. That'll be the second one, price point 2. There we go. Going to the 5-minute, looking at that breakdown after the sweep. This is how that structure looks. If I was just to rewind just a little bit more. If our price was looking before we got to that fair value gap of the 30, the stop hunt, the trade back into the bodies of this swing low here. Hopefully this isn't playing too fast. Do it to every tick. Oh no, I can do it to every second. Oop. Every minute? Yep, alright, bet. So every minute, and slow down the speed just a little bit. It's moving way too fast. So breaking underneath that candle's low, coming back up, retesting, trading into the order block. That was pretty much made within the 9:30 Judas swing, and we traded right back into this candle's range here after we've cleared that level of buy side. Just seeing how it continues to play out. We trade through that level of support. something known as sell side that is resting inside of the internal structure of this range. But we want to, of course, see price take out the bottom, what's resting below within this range, and sweeping that sell side. Put this on 10. We'll continue to watch this play out. If price continues to keep going down, then the next area will be these bottomless candles here. Because that's where money is residing. And you would just watch the trade continue to pan out for the remainder of the day if we do get back into that area. So that was pretty much what I wanted to show. Representation of how ranges expand. They get wider, longer, bigger, even within a range. When price is sitting within these holding patterns here, it's still doing something. It's accumulating orders, setting itself up for the next stage of delivery, either going up or down. So it does depend on the bias that you have set for yourself. This level of sell side, no longer worried about anymore. This is now a continued breakup structure underneath that supported low. And we watch how price sits here and gyrates back and forth in between this level as it's working its way down within that range. Still looking for this sell side here to be targeted within the low of this range if we are going to remain bearish with this leg of structure at 28,611 flat. And we get close to it, coupling lows, relative equal lows, and we're magnetized going lower. And it almost gets to it right here on this candle. Comes in at 616 when you're looking for price to trade into that 611. So roughly about like 5 points. Yeah, so about 5 points and 3 ticks into trading into that target before reversing away. And a lot of the times you don't need the market to sweep on and underneath an old candle low or wick for the trade to be valid. You could get out as soon as it gets relatively close because you don't want this effect to happen to you where the market drags very strongly away and retraces you 216 points away just because you want an extra 5 points. You get stopped out and then boom, it smashes through your TP. And, you did take a good trade, but the way you managed your position made a good trade terrible. So yes, orders getting lower. Seeing lower highs with the structure, the trend, everything is pretty much respecting bearishness. Just trying to make the approach very, very simple. It's honestly not that hard once you have a bias in mind what direction you're looking for the market to go into. So that bearish structure was respected. Price returns into a fair value gap as well after we made that expansive up move. Trade back into that gap, it fills it, we get a trade out of there, and we make ourselves down into these relative equal lows here and expanding the rest of the range for the day. So just a nice little recap. And I'm gonna jump into the actual time. So that was pretty much how Wednesday played out. Now piggybacking off that, going back to the 15-minute chart and looking at what price did for Thursday, which was today. So this is pretty much how I was internalizing the market initially versus what actually happened going out the remainder of the day. So I participated on 2 deliveries in the market, one short and a long. So when I first seen the market we were already sitting within the area where we already broke out of bullish structure, but also keep in mind that we were sitting within a range. So price was already sitting within a initial holding pattern here. And when price was sitting inside that holding pattern, it broke out of that range very strongly here within this candle at 8:15. So when I seen this leg of displacement, I'm gonna just title it strong displacement. I sense that bearishness is getting I sense that there is a forthcoming of bearishness within the marketplace. We had that little fair value gap here. Market traded within that fair value gap, created a lower high, and then we seen a decline in prices for about 175 points. So price expanded 175 points, and I was, honestly looking for when core PPI came out that we were going to push lower. Now, initially, it did make its move lower and trade underneath, the bodies of these old lows right here, and return into this fair value gap. And once we got into this, this 15-minute fair value gap, notice the type of reaction we had out of here with price. Sometimes you can't see confluences with fair value gaps, pretty much creating those ranges on these order blocks. So this 15-minute here is also tied with a 30-minute orb from a bullish perspective, and you won't notice anything with that area on the hour. It just looks like price is coming back down to return to the range of the candle. It's grabbing something, it's retesting something, and a lot of the times it's either FVGs or order blocks hidden within the trends. And once you get better at this, you'll be able to identify them. So that low here, market comes into it and tags it, and we get that move down here at core PPI. So when we opened for core PPI, market moved up 54.5 points and came all the way down for 112, trading underneath that old low, and also rally into that fair value gap slash 30-minute orb. We had a nice reaction out of there at 8:30. Retrace, create the short-term high. Looked as if we were going to accumulate back down here again. And let's see what price did. It did not. So it ended up creating a higher low. And this is going to stem from the settlement pretty much being bullish. So if I take off the week and put the day, this is our entire range on that stick, because this is representing buys. I just have it colored white, but this is representing that entire range for the bullishness on this stick, even though we're looking at it from a 15-minute perspective. But this is the daily. So when we created the open back here for Asia, and Asia's low is, down here. We created that low for Wednesday within Asia session that came in at 28,264.25. The market continued to keep trading up from the creation of that low. Notice how we, pretty much trended upwards, came back, retest, gave it to that 15-minute inversion. I'm sorry, not 15-minute inversion, but that 15-minute bullish fair value gap, and price, ascended, creating these higher highs. The market is traveling upwards and taking those higher highs that are being created on the left hand side of the chart, while also rallying into the old priced lower highs from the previous sessions throughout the day. or days, because we trade through multiple ranges scattered across majority of all sessions, but you're just really looking at you're just narrowing it down to like the last 3 or 4 sessions, really the ranges within the week itself, while also keeping in mind the old ones. So taking away the PO3 for a little bit so you can see my markups. That break of structure did not get upheld, and that structure flipped. Now, I do understand that ES pretty much had that same similar leg of structure. Just studying what it was doing within this range, you see we still have that same fair value gap that was here on NQ. That same fair value gap on the 15 that was here on NQ as well. And the very last thing that I probably notate is if we had any SMT divergence. So we have the low here at 8:30 and then the higher low here at 9:30. So just an hour apart. You see right here, we have the low here at 8:30, and then we have the lower low here at 9:30. So this is one of those signaling indications for SMT divergence, and we got that bullish calling, which is why I hopped into longs after I got stopped out of my shorts. So SMT divergence, get that play higher. Same move that we got on NQ, trying to rally above, all-time highs or the data high on the range itself. And I'm doing this off of ES, just to show you how these indexes correlate with each other. You can use this strategy to be in sync, with the marketplace. So that's the data high. It's the candle at 9:45. YM did the low, higher, low. We got low, higher, low. We got low, lower, low. So willingness to stop any potential players from taking shorts, completely out with the rally. And my YM is pretty much respecting the bullish continuum of the structure and just going upwards. So it's not a hard concept to understand, but you do have to have a keen eye when it comes to advanced market structure theory or just concepts in general to understand how to properly use SMT divergence and couple that with ICT tools and concepts to be able to take advantage of these moves that you can participate in the market. So Micro NQ had a very strong move up, way stronger than the other two pairs initially. So definitely NQ was one of those leading pairs, or the leading pair. So the first indication of that break in market structure for the rally, or that shift in market structure, says the structure is no longer bearish or bullish. So it's just a form of a retracement. So we get that shift in market structure at 28,826.75. Price trades through the inversion. We got SOT divergence at the lows. Price comes back down and retests at 950, and then we get that continuation expansion going up. So there's a possibility, yes, there's a form of rejection of this old high here, and I will title it blue or label it blue because that's that level of support. And we retest that level of support and leave a gap. The price does not come back into that gap, and we ascend and create a higher higher low close on the uptrend here that's being identified around 9:57, literally 3 minutes before 10, and then we get the opening of that 10 o'clock macro. which is one of the macros that I love to trade to get continuations on moves. So 10 a.m. with the opening of that macro right here in the swing going higher and looking at it, perfect opportunity to capitalize on the long. So this is what I seen. Ended up seeing that fair value gap that we left on the M1 price opening here in the 10 a.m. macro, and then I decided to take a long in the 10 a.m. macro. So long in the market here, setting your stop right below the fair value gap, 37-point stop. Your target is of course a data highs, which was about 108 points, but since we're bullish, that top of the candle is of course still expanding. This ends up turning into a 1-3, and this is the setup. That is the trade. And then this is how it played out throughout the day, before we end up getting that reversal. And that was the trade setup that I took again as well, besides the long. So the long was one of the moves, solid 1-3, 138 points. If you want the exact numbers, about 142 points for the maximum draw on the range from entry. After the 10 a.m. Pretty much flipped and no longer ascended, that's when the biases have pretty much flipped now. Though I'm not really looking at this inversion fair value gap. I was more so primarily looking at the one that was left up here. So when I seen this inversion fair value gap on the M1, I executed my short here right at 10.10, and I sold short and took it down. So FEG, 1 minute. And my entry, when you look at my videos for my live account, was literally right here at 10.10, and then I held it going all the way down until they got to this low, and then I believe I exited here on that trade, catching like a good amount of points. Right here, inversion, entry, stop losses of course above it, about 35-point stop, but I always do a maximum draw of about 50, giving myself room. And of course that target, so about a 1-8, but really the draws on my trades are really way longer than that. That's just how I choose to exit, just to get what I need out of a move. And continuing to play it, it continued to fall from my inversion entry, completely sniping the candle's wick away from the high of the day, because you know that if this is the highest up close of price, which would mean this would be the data high from a macro perspective. If price is forming a area of resistance up here and turning away, this is how you catch it when it's trying to get ready to make that opposing move against you. Turn on PO3, you see how the data high that I marked up in hindsight is the same data high on the actual candle for the day. So this is literally how you snipe the upper proximities of wicks and how you take the move down. So continuing to watch that move on the M1 opposed to how it looks on the higher time frame. So fell again. Adding this over here, and then the low of this would be the entry. And make adjustments really quick. Sorry. This candle high comes in at 28,996. 196.75. There we go. Boom. Stop loss. Same thing as I mentioned before. And then the target, of course, be where we formed a swing low. And we're magnetized to that area. 215 points, 1 to 4 risk to reward, risking anything between 34 to 50 points above the inversion is where the stop should be placed. And from that, we pretty much just kept traveling down, sweeping that next logical area. This is where we came back to that low, higher, low close from that SMT divergence that was identified earlier. This is just what it looks like on the M1. And that last and final level of structure being looked at, where we came and swept that low on this range, and then the market created a low, higher, low close, changed trend direction again, and retraced, coming back up. Either way, very, very solid trade for a maximum draw of about 389 points in a tick. This is a 1 to 7 risk to reward trade idea that pretty much panned out for me. And just letting the rest of this play out. So I hope you guys enjoyed the video. That was pretty much everything that I had noticed for today, and played out for me when I was actually trading. And now I'm just letting the rest of this pan out just to see the longevity of my move. And okay, there we go. And see exactly when I got turned over or would have broke even. Really, none of this really matters, what the market is doing, after you're exited and out, because it's no longer any of your concern. Yes, the marketplace at one point in time was bullish, but then at the same time, that bullishness, it was here at one point, and then the next minute it's not. We're selling, again, a great move to the downside. The market since entry, if we just take exact numbers, since entry, it took 51 minutes. 51 minutes of my time for the market to expand over 401 points for me to capitalize on. Though the entirety of the trade is not getting held all the way for 51 long minutes, I'm still able to capitalize off of, well, for this trade, it was about 110 points that I was able to capitalize on, but I'm still able to take, 100, 200 points, 50, 60, 70, 80, out of these ranges if the market is giving it to me, and get out. And just keep scaling the profits off of just great entries, and taking these 50, 60 point moves, 100 point moves to my advantage. But after that trade, that entry, if we look all the way to where, I would have got stopped out, this trade here would have stopped me out somewhere along really here. So it would have took roughly about like 2 hours after my exit for the market to come back up to my entry and stop me completely out. So at that point, you're literally just watching your profits just leave you. Like, you should have gotten out of the trade a long time ago. But these relative equal highs back here were bullish. They end up getting targeted on the upside of the trend. Market creates a gap here. We trade into that gap. Respects that, or validates it as a sweep, which is what you want to see. Our entry. shift in market structure identification, which could be used as another entry if you need to wait for more confirmation. That's the shift. And it happens at 28808.75. You take entry here in this candle. That's the candle that you would enter in. You would long here. Same thing that we do. 50-point stop. And your target would be these relative equal highs here. Of course, the high on the end of the stick that's currently coursing up when we retrace and go back up. And today the highs, any of the short-term highs that are just coupled on this side, though there is no real data left for you to really idolize once the data high is hit. If it continues to go up and go up to like the high of the week and things of that sort, it's really no real necessary reason for you to continue chasing it. A lot of the time these moves are spanning for like hundreds and hundreds of points, so unless you just want to catch 500, 600 plus point and sitting trades for hours on end, that's really up to you. I take what I need, a good 60 to 70 points that pay all your bills. But at least seeing these types of moves like this, it helps you understand, you feel me, the longevities of your moves. My moves are, 1 to 7, 1 to 10s, 1 to 15 RRs, 1 to 20s. Usually when I get in, I have a more likelihood of winning the trade than losing it, if that makes sense. And that's only because of the concepts that I'm, applying here. So the PM session, this was the move for the continuum of the long after the market sat here and pretty much gyrated back and forth, creating, nice moves to the downside. And it finally got tired of sitting within this range here and finally started to make its way back up and attacking the high from back here that we made on Wednesday. So 29,251 flat would have been your full get out for about 442 points and a tick, and that's your fill. So that's a 1 to 9 risk to reward. And yeah, I think that pretty much sums up today, the trading process behind why I was looking at what I was looking at, and then going into this next stage of delivery in the PM session, which I have not seen, and you guys were able to mark that up and identify whatever moves were probably within that buy model here. So the very last thing that I want to do real quick before I go is just take this fib here, and I just want to see if there was some type of indication for an entry in the long right here from that low. Change the color so you know exactly what I'm marking with the fib, and the short-term high here that we created. Do body to body, wick to wick. I use either or. Not really particularly picky about it. So trading within that 70.5 to 79% retracement level. So we get that reaction out of there, really on that 70.5 within the range. So it's very important that you understand trading ranges, because it helps you understand why you look at things the way you look at it. But this entire range here, take it from the low to this high, we get that retracement, that draw into that 1 minute fair value gap, the sweep, and then the ascension up after the sweep. This is literally textbook setup of your 4 market conditions. So if you're very familiar with ICT concepts, then you would understand exactly what it is that I'm talking about when I do say that. But that pretty much encapsulates everything for the week so far. There's still one more day left remaining, Friday, but for the most part, Monday has been covered from um, when I recorded the video Monday. Now have the 9th, the 10th, and 11th covered. Um, some things that you can sit here and eye, the highs and lows of the day, studying IPDA in between the ranges, looking at what the market has done in Asia, how it formed a bottom, and tying all of that relative structure into how these models pan out and look on the higher time frame. So price is fractal, always remember that. That's why you're always going to see me on the lower time frame, assessing the market for entry and looking and analyzing at the direction on the higher. It's a very simple concept. It's just, how do you catch it and not get stopped out? This is where it starts. So hope you guys enjoy, and I'll see you on the next one.